Hey guys, we're back with another IPO basics video. So if you're waiting for the next update on the MerryMart video where we're going to talk about the valuations, the balance sheet, debt, and all of the underlying numbers towards the company, that's coming out tomorrow. It's still being edited today, no? So tomorrow it will come out Sunday, so expect that there. But for this video, I want to lay the foundation also in terms of IPO because I get a lot of questions. I got a lot of questions from all of you asking for the basics of what it is. So what can you expect in this video? We're gonna tackle what an IPO is, why an IPO is needed, why do companies do IPOs, what's the whole narrative in this, who gets to participate in IPOs, and this is the most important thing. What do you look for in terms of investing in IPOs? What are the things that you look for? How do you know it's good? How do you know it's bad? Then are IPOs considered cheap? Do IPOs always go up? Then in terms of you as a long-term investor, what are the things that you look for as a long-term investor? And then I guess you could also segment it. If you're someone who's trading for the short term, should you start investing in IPOs? And lastly, can you use technical analysis when investing in IPOs? So that's what we're gonna have in this very, very raw video. By the way, if you're new to this, my name's Marvin Germo. I'm a stock market trader, investor. I've been investing in the market for more than a decade now. And the reason why I created my YouTube channel is basically to create daily content that will help you. Because at the end of the day, when it comes to trading and investing in the markets, it's all about conviction. It's all about you having the right rudiments. Because at the end of the day, I'll never tell you, I won't order people, this is what you buy, this, sell this. No, it's all about you creating your own strategy, creating your own framework, because what will work for me won't work for you. What will work for you won't work for me. So the best thing that we could do is give you principles, the right foundation, then you marry that to who you are as a person, your risk tolerance, and your timeline. And that's what will help you navigate and weave towards the market. So at the end of the day, please remember this also. No? People always want to come into IPOs because they see it as an opportunity. However, please do note this. If you don't have cash right now, especially in the times that we're living right now, if cash is scarce to you, cash flow has been hit, you're in debt, the proper foundation in terms of your financial planning is not set, then don't invest in it even if there's an opportunity. Please remember, and I'll say this over and over, people always say opportunities only knock once. No, it's not. There will be more opportunities to make money. What you need to take care of right now is your liquidity. If you think your job, your business, your cash flow, your savings are hit. So there, let's start. So IPO basically means initial public offering. It's basically the first time the shares of that company gets sold to the entire market. So what do I mean about that? When a company before it goes into the stock market, it's still a private company, meaning all of its data, all of its figures, all of its numbers, its growth, the plans that the company has, they're not mandated to disclose it because they're just a private company. But once they start and they do an initial public offering, suddenly everything that they have, their plans, it has to come to a point where the public also would need to know that information so that it's fair game for everyone. So that's one of the biggest fundamental differences. Now, if you're a private company, you don't have to disclose your debt. You don't have to disclose your earnings. If you're a public company already, everything can be scrutinized. And I think no, I have a lot of friends also who run large private companies, and I would ask them, bakit hindi ka nag-IPO? They said that I don't need the additional pressure. I don't need this pressure to grow every time, because you have to remember this. Every time companies go into an IPO, there's such a pressure for them to be able to perform, because if they don't perform, as you all know, people sell. If the company does not do well, people sell. And if they sell, more sellers bring the prices down, the stock price would go down. And syempre, that's additional pressure for the owners. That's additional pressure for the company as well. And if the company is doing well and all of the underlying reasons for them to do an IPO is not needed, that's why some don't do it. And then another thing, I mentioned that everything gets to be transparent. The accounting becomes more tedious if you are a listed company versus a normal private company Also, everything also gets questioned. The dividends, you can't, the declaration of dividends also becomes not naman an issue, but it becomes a matter of uh, something that you can't just give dividends out every time because it's not just you anymore. So unlike private companies, anytime dividends, whenever they would want, as long as it's theirs, they're the ones in the family getting it, they declare dividends. But for a listed company, of course, they have to consider that there's a lot of people also owning the shares. The more dividends they give, the more cash that gets sucked out from the company. So basically, that's it. So I mentioned that it's an initial public offering. That's when the shares of the company uh, get sold to the public. And that's when people like you and me who have no direct relation to the owner, because you can always buy shares of stock of ownerships of company, but that is if number one, the owner or whoever owns the shares would sell it to you. But if you don't have any connection, no relationship to them, there's no shot for you to actually own the stock. No, it won't be offered to you. You won't get it. So I think in terms of context, if you're a person who wants to buy a piece of a mall, if you're a person who wants to buy a supermarket, you're a person who wants to buy a grocery store or a utility company, if there's nothing offered to you, you won't be able to be a part owner. And essentially, that's what an IPO does. I really believe the stock market is one of the greatest equalizers because it allows people like you and me to have, number one, a chance to be part of the biggest corporations in the country. So that's what an IPO does. So the next thing that you could ask is, why do companies go into an IPO? We are the 6:45 mark. Comment below, guys, if you're learning from this, if this is something that's benefiting you, if you're getting something, and press the like button for the YouTube algorithm so that this video gets seen by more people interested about investing. Anyways, there's two ways for companies to raise money. Of course, they can always borrow, but at the end of the day, companies can't borrow repeatedly. And because if they keep on borrowing repeatedly, the problem with that is, of course, the rate of the interest that they're paying becomes it would become very very burdensome also for them. And you have to remember this: there will come to a point that if they borrow too much, the creditors or banks or people who would want to lend, you would not want to lend to a company that has a lot of debt already to begin with. So that's why companies just don't keep on borrowing. But the thing about that is, uh, that's why there's another option for them that they could get to sell their shares to people who want to become part owners of that company. And that's where the IPO comes in. It's basically a money making mechanism for them. It's basically a way for them to be able to raise money so that the company in turn gets that cash. And to the people they sell their shares with, that those people, they get to become part owners. So remember this: every time a company would borrow money, those people investing and lending money, they just get interest. They don't have any stake in the company. And that's why also when it comes to the stock market has a higher set of risks compared to debt. Why? Because when you borrow money, uh, the thing about that is, good market, bad market, good economy, bad economy, it's that they're mandated to pay you. You have a right to stake claim for whatever that you're owed. However, when it's an IPO, you're a shareholder, you're a stock owner. You're almost at the same footing with the founders of the company. The founders of the company, though, have more shares, have more money in the company, but you have the same footing. Meaning, the company is doing bad and the shares are worth the lesser amount, then since you're a part owner also, then you also get battered, you get hit that way. And that's why when it comes to investing, comparing bonds and stocks have greater chance to earn. However, but yung kapalit nun is because you're a shareholder, if things are not doing so well, then you also get hit. You suffer the consequences also if the company is not doing as well. Unlike bondholders, as long as the company has the ability to pay them, they get uh, they get money, they get returns, and they also have a shot that at the end of the tenure, they get their capital back as well. So who gets to be part of the IPO? So essentially, it's sold to institutions and retailers. The large part though of people who get a big chunk of the IPOs it's essentially sold to institutions most of the time first, because at the end of the day it will be more efficient, because if for for that company. Because if it's an institution, they just have to make a few transactions and they get to raise a larger amount of money. Unlike if it's to retailers, the problem there is, for example, they want to raise 100 million, then you have 100 people giving 1 million each. So that's 100 transactions. It makes it more tedious. It becomes harder. Unlike if there's one institution that can give 100 million, they're done in one transaction and then konti pa yung kausap. But so people are asking, paano yan? What if maliit lang yung capital ko? The Philippine Stock Exchange has created an online platform already. They call it LSI. It's for local small investors that if your capital that you want to put in for that IPO would not go more than 100,000, you can apply for that. So there are allocations for institutions. There will be allocations from brokers, your normal brokerage account. You can also get a larger amount. Now, if you want to get more, if you want to put in more money above and beyond the amount that's allotted for the LSI, the 100,000. So say you want to put in 500,000, you want to put in ₱1,000,000, then you can go through the route of your brokerage. Then on top of that, if your capital is less than 100,000 pesos, then you can take the LSI route. So it's easier right now for retailers already to be able to invest in an IPO. So institution retailers can be part of the IPO. Now, what do you need to look for when you're investing in an IPO? So I just want to share two things, and I've said this already in a lot of videos that I've made. Number one, you look at the proceeds of the IPO. So it can either be number one for expansion or number two for payment of debt. I'm not a big fan of companies that use a large chunk of the IPO to pay out debt. Just think about it this way: you have a friend comes to you and says that, Marvin, I want to start a business. As I start this business, I want you to give me money and you become a shareholder. Pero we currently have ₱1 billion in debt, and I will use the money that you give me to pay off that debt. So parang it doesn't look so good, no? Versus there's another person that comes to you and says that, give me your money. I will use that your money to be able for the business to expand. I will use that money to build more, say, supermarkets, build more food kiosks, build more manufacturing facilities. Then I like that because the money that I'm giving is contributing towards growth. So very, very important. You have to not just buy just because it's a popular brand, it's a popular company. What should be very, very important for you is you need to know where the money's going, where the proceeds are going as well. So between growth, expansion versus debt repayment, go always for expansion. Always go for growth. If it's debt, you think twice. I'm not a big fan of companies that would go into IPOs that would just pay debt. Now, a lot of people may ask, that might be complicated for me to learn and understand and research. Please remember, because of the internet, because of this, because of 3G, 3G, LTE na pala, LTE, 4G, 5G, whatever the speed is right now, and because of this, everything you need to know about the company is just you typing away via Google. So you can go to pse.com.ph. You can also go to the company that's listing. They always have an investor relations department where you can get a copy of the prospectus of the IPO, and everything that I said is written there. Tsagain nyo lang. It's just a very lengthy, wordy document. It's a lot. I think lawyers enjoy. I don't know if lawyers enjoy reading it, but it's in all intents and purposes. For me, it looks like a legal document that's used for business. But yeah, everything you need to know is found there. Next, aside from the proceeds, no, I will also look at what's being sold. Primary shares ba or secondary shares? I'm a big fan of a company that sells primary shares because automatic, if they're selling a large chunk of primary shares, the money that you're giving goes to something that's newly created na shares, meaning it goes straight to the company. Because there's also secondary shares. The secondary shares are shares owned by existing shareholders already. It could be venture capitalists, it could be the founders. But when you sell and it's secondary shares, what generally happens is this: the money goes to them. It's an exit mechanism. The money that you're putting does not go to the company either for debt repayment or expansion. It goes straight to the earnings of those founders or of those who would want to exit. Nothing wrong naman about that, because at the end of the day, there's a lot of angel investors and venture capitalists or early investors in the company that want also to profit take and maximize their investment. So it's not wrong, but I'm a big fan of companies that raise money via IPO, selling primary shares, and a big chunk of that will go into expansion. So there, we are at the 15-minute mark. Comment below, guys, if you're learning. If you're new to this, subscribe, like, so it helps the YouTube algorithm. And guys, please hit the bell, smash it, so that you get updated every time I come up with new content about investing. So, and I also forgot, if you're new and then you think, what's Marvin saying? These are all jargons to me. I've written 5 books about investing in the stock market. They're in the link below. You can order them via Shopee, and Shopee will send it wherever you are in the Philippines. Use this lockdown for you as a way for you to be able to make money, invest also, and sayang eh. I really believe that we are sitting in one of the greatest times to be alive. We are sitting in a time, in an era where the internet has changed everything. That during your lockdown, but you can still use the stock market as a way for you to be able to generate revenue, as a way for you to be able to earn. Now, people ask this question, no? Are IPOs really cheap? Kasi it's the first time it's coming out. Are they really cheap? I want to submit this under this context. Number one, the owners, the founders, built the company without you. Meaning, it could have been 5, 10, 20 years before they went into an IPO. It could be. Now, those hardships when the business was just starting out, hindi ka kasama dun eh. And they're selling it to you for you to be an investor. You don't have to run the day-to-day operations. You don't have to take care of the headaches for the company. So generally speaking, no founder would sell their company at break even. No founder would sell their company cheap. All IPOs, regardless if it's 1 peso, 100, 1,000, will always be sold at a premium. It will always be sold at a higher price. You won't see an IPO that will be sold for what it really is, for what its exact value is. You won't see an IPO that will also be sold lower. It will always be sold at a higher price. Now, what does that mean? So, paano yan, Marvin? Mapapamahal ako. The thing you need to analyze now is this. When you come in, you have to look. That's why I said I like companies that give their IPOs for expansion, because babawi ka na lang sa future growth ng company. Meaning, if the company is doing well later on, if it's doing well now and it will continue to do well later on into the future, you will be rewarded by that. So meaning, if it has 10 stores today, you buy it now, then later on it becomes 1,000 stores. Kahit na pamahal ka, when you entered in and it had 10 stores, by the time it has 400 stores, the overpayment that you put in when it had 10 stores palang will be compensated already, because the company has started to grow. So if you're asking me at 2020, are the IPOs that will be presented cheap? Not in 2020. It will be expensive for 2020, but if you're looking at it from their growth along the way, then that's where it becomes cheap already. The problem there is, again, there's risk attached to it. Why? Because from 2020 to 2025 to 2030, if everything in the company goes exactly as planned, then it's cheap, meaning their growth targets are hit, their expansion plans do well, their margins are maintained, they don't have competition, nothing happens in the macro economy that could possibly destroy their revenue, and then they continue to at pace to their growth, then by all means it's cheap. But again, there's a lot of variables involved with. That's why you have to really know what you're getting into. You have to really know what you're investing in, because if you do not know, I'll stress this over and over. Do not invest. Do not invest in something that you do not know. Do not invest in something that you do not understand. Do not invest in anything just because someone says that you're supposed to buy it. You have to do your due diligence. There has to be a very large reason on why you're buying it. And I've been saying this in so many videos, that do not buy just on the hope. Do not buy on the hope that it will possibly go up. A lot of people want to get rich by investing in the stock market, but it doesn't work that way. It works by you studying. It works by you knowing the numbers, the nitty-gritty on what it is. That's why my next question that I wrote down, what do you need to consider when you want to buy IPOs? You need to know the company very well. You need to know it very well, meaning you need to know their competition. You need to know, are they part of where the cash flow is going in the economy. How much cash do they have? How much debt do they have? Are their earnings growing? How much equity do they have in reference to their debt? Are they liquid, meaning do they have enough assets to be able to pay off all of their all of all of all of their all of their liabilities, because there might come a point in time where wala masyadong benta or mahina yung benta. Do they have enough assets that their liabilities will be taken care of? What's their standing towards the government? Are they in good terms with the government? So things like that. Are they heavily reliant in one supplier? Are they heavily reliant to one customer? Are they heavily reliant also in terms of are the things that we need to check. No, those are the things that we need to analyze in the grand scheme of things. So you can look at it from a macro perspective. You can look at it from an industry slash sector perspective. You can look at it looking at the accounting, the numbers, the ratios, and everything. But if there's one thing that's so important is you need to know that you need to know everything about the company. If you're an investor, you have to fall in love with the company. You need to know it very, 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 very well. Now, do IPOs always go up, especially in the first day? No, not at all. There are days where IPOs normally go down. There are days where it goes up. There are days that on the first 2 days they're up, then they suddenly start to go down after. So if there's one thing I do know, no one can predict whether a stock will go up. A lot of people have been saying, oh, maliit yung IPO yan, akit yan. Not all the time. I've seen some IPOs na maliliit na bumabagsak din. I've seen some IPOs na malalaki na umaakit din. So no one has a crystal ball. No one can forecast. No one can guess. But if there's one thing that you can do, you always base it either on what the company is. Because at the end of the day, when you're entering an IPO, you're buying a company. Now, if you're a trader naman, your rules should be set, no, that if it goes down at a certain percentage during IPO date, then you cut. If it goes up a certain percentage, then you sell also. So you have to be very, very specific on your rules. Or if you're using technical analysis, please remember, for those who read my books about technical analysis and attended my sessions, I would always say technical analysis is past prices plotted into charts. By the way, if you want to attend technical analysis, we're gonna have our live sessions back, no, yung classroom sessions. For sure, Manila is coming soon, this June. Link in the description. And for the other countries, we're going back. We're going back to where we were before. We're gonna do the sessions. But anyways, na-excite tuloy ako. But I wanted to say that technical analysis is past prices. So if it's a newly IPO'd company, wala pa siya masyadong past prices, meaning it's not as reliable, it's not as good, it's not as sturdy yet. You can still use charts, especially for the first day. You can use a 15-minute chart, you can use a 1-hour chart, you can use those candlesticks. But everything else, the support that gets built, the resistance that gets built, are not as strong, are not as sturdy, are not as reliable compared to uh, compared to a stock that's been in the market for a very, very long time. Again, technical analysis, past prices. If there's no past prices yet, it's not as strong and it's not as reliable. And the whole arbitrage kasi of technical analysis is the longer it is, the stronger it is. So this one, wala pa masyado. But can you use it? If you're gonna use a 15-minute chart, possible. If you're using a daily chart, you may have to wait first for a particular period until the technicals become more solid for you. So there. I hope I covered a lot. No, we're dragging close to the 24-minute mark already. So if there's anything that I did not cover yet, put them in the comment section and I'll try to make a video on top of that. And then there. Expect the MerryMart video to be up tomorrow. Then expect Monday we're gonna talk about forex trading naman. So if you guys have any questions about forex, put them in the comment section. We're gonna make the video about that. If you guys have more questions about MerryMart, I'm gonna make another video on that. For those asking for technical analysis courses, it's still the live trading sessions. No, it's still dependent per city. For those asking for Stock Smart's basics, I have online courses. Links are in the description below. One is with Sean Si, Make Money, Grow Money. The second one is with Chinkee Tan, Stock Market for Everyone. You can click the link there. I have a second YouTube channel. It's called Marvin Germo Podcast. A lot of the live streaming videos are there. So link is in the description. And there, I hope you guys subscribe. I hope you guys got a lot from this. I'm gonna keep doing videos. I'm gonna keep making as much as I can because I just really hope that this adds so much value to you. I hope that this adds so much content to all of you and it helps you trade the markets with confidence, because that's all I want. And that's the reason why I continue to make videos. I really want to make a difference in the lives of a lot of people. I really want to make a difference in your lives. I want this channel to be something that 10, 20, 100 years from now, as long as may YouTube pa, I want people to reference the videos and it becomes part of the next generation of Filipinos that will be financially free. Because at the end of the day, I really believe that's true. The stock market, if done well, studied well, done properly, allocated properly, it's one of the greatest investments out there. So that's it for now. Marvin Germo. Comment below now. We're 25 minutes into the video if you stayed up until the end. And that's it for now. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys. And see you and God bless you all. Hit the like button, smash it, and God bless you.